Things have been quite stressful in financial markets this week, and that stress could ramp up a whole lot more later today when the latest US CPI data is released. The annual inflation is expected to decline to 6.4% in January, while the core CPI, which excludes volatile food and energy prices, is seen at 5.5% from 5.6% previous. On a monthly basis, the CPI is forecast at 0.4% from 0.5% previous, while the monthly core CPI read is expected to hold steady at 0.4%. So, on net, the broad expectation is the inflation data will indeed soften. The trouble is that if it doesn't, a market already feeling uneasy could all of a sudden feel a whole lot more uneasy. The biggest disruption to the stock market and investor risk appetite in recent months has been the rise in inflation, which has forced the Fed's hand into adopting less investor friendly, more restrictive policy, that is to say, higher rates. Throw in an additional strain on markets, as has manifest via these latest bank sector woes, and couple that with another jump in inflation above forecast, and all of those calls over the past couple of days for the Fed to move away from a 50 basis point rate hike at next week's move and even consider a complete pause will lose credibility. And so, as we consider today's release, if the data comes in above forecast, we expect there to be another big wave of risk off flow and demand for the US dollar. If, on the other hand, the data comes in below or even as forecast, we see room for stocks to recover and the US dollar to sell off. That's all for now.